A quick check on all the stocks that we are tracking this morning, and what a set of earnings coming in from Nalco. I think this one could be a good gainer in today's trade. We saw it with Hindalco, now we see it with Nalco. Numbers were phenomenal. Revenues were up 31%. EBITDA came in at 1,550 crores versus 397 crores. Margins have improved significantly. Now, even I didn't think that that was a real number, but that's truly the improvement that the margins have been seen for Nalco at 38.7 versus 13%. Profits are at 1,046 versus 187 crores. It does come off a low base, and that's why those numbers look as good as they do. But apart from that, commentary has been quite strong. Most attributes of those earnings have largely been better than what the street was expecting. Margins were also aided by lower raw material costs and lower cost of power and fuel. So both those factors contributing 22% to an increase in margins. The company has noted that the domestic environment looks quite positive, on back of which you will see an up move on the counter. Motilal Oswal put out a report. They're constructive on Nalco on the face of it. I'll quickly zoom through the others as well. Torrent Power revenues were up 3%, EBITDA was down 1%, margins were also down, net profit was down 8.5%. So it's not been a good quarter for Torrent Power, very, very muted to say the least. 20% drop in renewable generation and revenue transmission is the verticals that saw a little bit of pressure, on back of which Torrents had it quite muted. Thermax, very strong numbers. Profit has grown 25%, revenues are up 13.5%, EBITDA has jumped 36%, and margins have also expanded. Revenue and PAT favorably have been impacted by an accrual of 66 crores, but out of that as well, operationally a strong quarter. Their order book looks healthy, and commentary as well is seeming pretty promising. So Thermax is a thumbs up, Torrent is a thumbs down, Nalco is a very, very strong thumbs up.
Yeah, Nalco, an interesting set of numbers. All right, the three on my list, I'm going to start with Vodafone. And this could, this is the numbers you could look at either positive or negative. On all things on balance, we've given it a thumbs down because revenue are below estimates, though they've gone up. Margins are in line, but losses have widened. And if you look at the losses for Vodafone Idea for the last 3 quarters, they raised 18,000 crore rupees, but their losses this quarter are 7,000 crore rupees plus. So that is why revenues have gone up and 10,932, but again, like I said, below estimates. Their earnings are about 8.2%. Their operating income is about 8.2% up at 4,550 crores, and margins have gone up as well. But margins have gone up because of cost efficiencies. They have improved the way that they're leveraging their costs, and that has helped. Their average revenue per user at 166 rupees is up 6.8%. Now, with all these positives, you would say, then why a thumbs down? Because the average revenue per user number has gone up across the industry. They all took hikes in their tariffs, so this is expected. But look at the subscriber base, down 5.1 million quarter on quarter. Postpaid subscribers are the only ones which have inched up slightly. The 4G, 5G subscriber base is down, and the down quarter on quarter to 125 million. And average data usage by 4G customers has also inched down a little. On the other hand, they have added 42,000 4G sites, which is their highest ever addition. So on balance, maybe thumbs down on this stock. I'll just tell you quickly what JP Morgan is saying about them. They've maintained a neutral target of 10 rupees. So that's an upside that you could see over 30% odd. Miss on revenue and estimates, growth led by average revenue per user. And they expect consensus estimate to see cuts amidst the miss. All right, con call commentary becomes important. The conference call for Vodafone is at 2:30 this afternoon, so watch out for that. Garden Reach, good set of numbers. Revenue up 28% at 1,152 odd crores. Operating income up 41% at 68 crores. Margins have also gone up slightly, 5.4 to 6%, and net profits up 21%. So strong set of numbers, as we have seen often with Garden Reach, so that has truly helped. Their guidance and targeting PAT margins of 7.5% to 8% going forward. So we have to see if they reach that, because they're close to 6% right now. The other one that I thought was interesting and very strong was Pitti Engineering. So thumbs up for Pitti Engineering, and one stock to watch. Revenue is up 42% at 429 crores. Operating income up 48%. Margins also have gone up pretty decently from 14.7 to 15.4%, and net profit up about 73%. This is in part because of other income of about 26 crores, but sales volumes have jumped by about 58%, and they've raised equity through a QIP of 360 crores. So watch out for Pitti. What's also working for them is the capex, which has come on board. So that might be seen as a positive for Pitti Engineering.
I have 3 thumbs ups on my list today. A lot of very good results today, I must say. Towards the end of the earnings season, you don't usually get that. But VRL Logistics, the first one on my list. Revenue is up 12.7%. A very strong number there. EBITDA margins expanded from 13% to 16.6%, as a result of which the profit after tax up 81%. Could very well do strongly in the session today. The stock of the day, to my mind, is Eicher Motors. And ignore the numbers, look at the commentary, and what Eicher Motors has said on the con call is stunning. We'll get Puneet to talk about it in detail, but I'll quickly tell you what MK, for example, says in its notes. So MK has upgraded the stock to a buy. The target price has been raised to 5,300. And all the other notes, by the way, from a Morgan Stanley to what have you, are all constructive here, because Royal Enfield connected initiatives have aided strong festive sales. The management has said that the post-festive momentum has largely sustained and is better than pre-festive. How many companies have you heard say this? A precious few. MK, on its part, raises the FY26 and 27 consol EPS by 10% apiece, led by volume upgrades. Watch out for Eicher. Could well be that lone star or one of the key movers in the green on open today. So this is one stock that you certainly watch out for. And we'll talk about this in detail, by the way. But very quickly, the last one on my list are the jewelry stocks, because the con call takeaways from the jewelry companies were very strong. So Kalyan Jewellers said that they've observed nearly 20% higher, over 20% SSG for the 30-day period up to Diwali. And PN Gadgil said that they saw strong festive season demand with 7 to 8% volume growth and 35% value growth YOY. So very strong October for all of them. Maybe as a result of with cities gone out on Kalyan Jewellers, they maintained the buy, but they've raised the target price because they believe the growth will remain elevated by the festive season, and they believe the return on capital employed for Kalyan will improve to 28% by FY27. So watch out for the jewelry names in the session today.